Hello traders and welcome. In today's review of Nasdaq, we have the second week of September, and in this review, this specific review is gonna be short. It's gonna be a short one because we only did have one day that has a red folder. Well, I don't trade the CPI. I just trade for the day, but we are going to explain the CPI day and what actually happened there. So we are going to explain the CPI and the PPI. I traded the PPI. It was a valid tradable day and the price action was clear then. So let's start. So on the 4 hour we did have an order block, okay, touching right here. And if we came close to the 5 minute, you're gonna see that touch, that specific touch. Okay, so and yep, right to the tick at 420. And at the same time, if we go on the hourly chart, let me remove that order block for a second. We have sweep 2022 mentorship model, and after the sweep we have what? Run stops with time. So all you have to do at the opening bell, you are going to find the scenarios where the price can reverse from. You want the key PD arrays like the I fair value gap. The price are going to gravitate to these key PD arrays if you were on site for the sells. Okay, if you were to buy, and let's say at this high is going to be broken early, you would see these fair value gaps been respected, and this would have been a close up, this specific candle, but it took out the run stops and the buyers were trapped here at this specific box. Yep, right here. Price did an immediate reversal, hunting these fair value gaps, turning them to I fair value gaps. We wait for the close of 435. Sorry, let me change. My bad. 935. That's your entry. Sorry, let me just fix the mouse. Okay. So your entry would be right here. Your stop would be right at the top of that I fair value gap. And for safety, more safety, you can put your stop at a maximum spot right here at this fair value gap, and the second candle of this fair value gap between 925 and 935. So let's say you did have the balls to put your stop here. That would be your first TP, because once the price break and closes down to the 0.5 at the 5 and the 3 minute, you will see the price gravitating to take this sell side liquidity, and maybe take the sell side liquidity that below that original wick and the sell side liquidity. That's your TP1 and that's your TP2. It was an easy trade, to be honest. If we did go to the 3 minute, let's zoom in more. you would have a market structure shift right here, and that's a better confirmation. So the same entry, the same logic, and your stop would be at that 0.5 of that candle, okay, at 9:33, and same. We have seen a close. This candle closes the 0.5 of this candle. Let's see. Nope. But price gravitate to the 0.5 twice. So yep. And smash to the TP, to the sell side liquidity. Yep. And then took these equal lows at a silver bullet time, market shift, high fair value gaps, turning into high fair value gaps. Price disrespected these KPD arrays and gone up. Specific time, and at a macro, you have the 9:50 to 11 and 10 between these areas. Okay, so it is time and price. So we go to the PPI day at 8:30. Okay. So this day I was looking for our sells, to be honest, because if we go to the weekly and the daily, I'll show you the daily chart in a moment. Just wait. We were somewhere between here, I guess. Oh, my bad. No, my bad. I confused this Thursday, the last Thursday, where we did have an order block at the weekly. So my bad. Exactly. Yep. My bad. Yep. So what do we have here actually? Yep. An AMD. Casual run stop right here at 8:30 news, and gravitating lower to take a buy side liquidity or an efficiency, and then reverse, go up to take these equal highs, this one and this one and this one, makes an equal high with 8:30. And that day I actually got in a sell right here. That was my stop at my maximum at the wick of the 8:30 news, of the PPI news. I've gone out here, and if we did put a standard deviation of a minus 0.25, my TP would have been right here at 1 to 1.15. Yep, satisfied with 1 to 1, and that's it, to be honest. So you have your run stops right here, you have your structure shift and markup, this one, this fair value gap, this CB turning into an I plus I fair value gap, and you would mark this one also in that BC. and you would look for buys if you were to buy the price, and you would okay, because we took these buy side liquidities and we are looking for higher prices on the daily, on the 4 hour, and on the 1 hour. Okay, so we'd look for buys. I was satisfied with that sell. I didn't take another trade, but I will explain the buys right here. So Michael and the 2024 mentorship have concluded that CVs and this is the best buys and the best sells were going to occur at the 0.5 of these efficiencies. So you have two choices. You either limit a buy limit right here, and your stop would be at the low of the second candle of that fair value gap of that DC. Sorry. Okay. And make a quick standard deviation right here. Wait a second. Yep. Targeting at least, like at least minimum -1. You would have 1 to 2. Aren't you satisfied with a 2R? Come on. So you would limit right here or right here. And in that day we did have okay. Anyways, okay. So you would limit the price right here, right here. That's it, and that's would be your final, your first and final TP, 1 to 2R. If you were looking for buys, not the sells, and of course, if you were looking for the sells, that this sell would have been so good, gravitating to that CP, and you see the wicks price respecting that CP, looking for lower prices to take an efficiency, take a liquidity, then reverse. So you could have been a both sider trade. One sell right here and one buy right here. And yep, that was it. Hope you enjoyed this review. I'm gonna see you in the review of the next week. Until next time, be safe.